XRP could be getting ready for a significant rally to the upside. However, there are a few concerns that we need to cover off. In today's video, we're going to be covering off a few different topics that I think are very important to understanding where the market is and where XRP could potentially be going. We're going to be taking a look at a crypto market update, including Bitcoin's most recent rally to $68,000, Bitcoin's ETF inflows, Ripple's RLUSD update. We'll also have the latest crypto news, including China's stimulus, Bitcoin concerns. We'll also jump into some technical analysis on Bitcoin so you can get a good idea as to kind of where BTC is heading. We'll jump into the XRP latest news as well, including things like the BRICS Alliance update, the potential for an XRP rally, jumping into XRP's charts, and of course, finishing off with some of my trading ideas. So as I get into today's video, if you do find it useful, informative, smash that like button. If you are new to the channel, subscribe, and let's get started. First off, let's talk about the big one, Bitcoin. Can you believe it? Bitcoin has surpassed $68,000 yesterday. That was a 1.49% increase in the past 24 hours. And the crypto market is buzzing with excitement. And honestly, it's hard not to get kind of caught up in all of that kind of hype, that kind of FOMO, and of course, feel the energy. And of course, it's hard to talk about Bitcoin's price action without also considering that the fear and greed index has jumped from 65 to 73, pushing deeper into the greed territory. This suggests that investors are feeling pretty bullish right now. But remember, while greed can drive prices up, it's also wise to stay cautious and do your own research. Okay, so next up, let's talk about the ETFs, the Bitcoin ETFs. On October 14th, the US-based spot Bitcoin ETFs saw a record-breaking surge with net inflows of $559.9 million in a single day. That's the largest since June and signals a growing institutional interest in Bitcoin as a mainstream investment. Fidelity led the pack with a $239.3 million in new capital. Bitwise wasn't far behind, pulling in over $100 million. Even Grayscale's Bitcoin Trust and its mini GBTC fund saw significant inflows. The president of ETF Store called it a monster day for Bitcoin ETFs, with total net inflows nearing $20 billion over the past 10 months. It's clear that institutional investors and financial advisors are increasingly jumping on the Bitcoin bandwagon. This could be a game changer in how cryptocurrencies are perceived in traditional finance. Now, let's shift gears just a little bit to Ripple, right, and their foray into stablecoins. Ripple has announced partnerships with several major exchanges like Uphold, Bitstamp, and Bitso to roll out their new stablecoin, RLUSD. Brad Garlinghouse, Ripple's CEO, mentioned that there's been strong demand for high-quality stablecoins to support various various financial applications. Think payments, tokenizations of real-world assets, and DeFi. He said customers and partners have been asking for high-quality stablecoins like RLUSD to use across various financial use cases. What's interesting about RLUSD is that it's over-collateralized and backed one-to-one by US dollar reserves or short-term cash equivalents. Ripple has been testing RLUSD on both the XRP ledger and Ethereum mainnets since August. Combining RLUSD with XRP could make cross-border payments faster and cheaper, with a huge win for global finance. All of these developments point to one thing: institutional demand for crypto is on the rise. From Tesla's massive move, moving Bitcoin around into record-breaking ETF inflows, and Ripple's stablecoin initiatives, it's clear that crypto is becoming more embedded in the conventional economy. The mainstream of digital assets isn't just a future concept, it's happening right now. This could open up more opportunities for investors and bring greater acceptance and stability to the crypto market. But remember, with every great opportunity comes responsibility. The market remains highly dynamic, and while the sentiment is leaning towards greed, it's essential to stay informed and make wise decisions. All right, let's kick things off with the big headline. Bitcoin has surged to a 7-day high, reaching $68,400. This uptick comes after China announced new economic stimulus measures over the weekend. The positive vibes are flowing and investors are feeling optimistic thanks to China's plans to increase its debt to boost the economy. So what's the deal with China? In a recent press conference, China's finance minister confirmed that the government will continue using 𝗕𝗘𝗪𝗔𝗥𝗘 measures to basically support the economy. Basically, in a nutshell, they're pumping more money into the system to keep things moving. Now, he didn't spill the exact numbers, which have some investors scratching their heads, but the market seems to like the news in any case. This isn't the first time that China's economic moves have given Bitcoin a bit of a boost. Back in late September, Bitcoin hit $65,000 after China injected $113 billion into the economy and loosened up some banking measures. But wait, there is a bit more. Bitcoin whales, those big-time investors, have been busy. Since March, they've scooped up 1.5 million Bitcoins, which is about 7% of all the Bitcoins out there. This accumulation has definitely helped Bitcoin bounce back from its dip below $60,000 earlier last week. And it's not just the whales. Institutional interest is still going on strong. Bitcoin ETFs have recently surpassed 5% of the total supply of Bitcoin. Heavy hitters like BlackRock and Metaplanet are showing their support, which is boosting market confidence even more. Now, the good vibes aren't limited to Bitcoin. Altcoins are following suit. Ethereum, Binance Coin, BNB, Solana, Sol, and even other favorite meme coins such as Dogecoin are seeing significant gains. This collective rally suggests that people, or more people, are hoping that the crypto train, possibly as a reaction to these macroeconomic changes, is leaving the station. So, are we finally experiencing the much anticipated Uptober? For those who don't know, October has historically been a good month for Bitcoin and the crypto market. 9 out of 7 of the 11 years, to be exact, crypto enthusiasts have been debating when October or Uptober will kick in, and it looks like the wait might be over now, and we might start to see this Uptober kick in. Now, a well-known Bitcoiner recently posted on X saying the tides are shifting. He believes that the next big rally isn't just a possibility, it's a reality waiting to unfold. That's some bullish sentiment right there. But what do you think? Are we on the verge of another major bull run? Let me know your thoughts in the comments down below. All right. While things are looking up, it's not all sunshine and rainbows. Some analysts are urging caution, suggesting that Bitcoin might not shoot straight to the moon without a little turbulence first. The CEO of 𝗕𝗘𝗪𝗪𝗘 shared his insights in an October 16th report. He said the prudent move may be to expect a final dip before the market attempts another leg up. This is interesting, right? He pointed out that data from Binance shows less than 40% of retail traders are currently holding long positions. In plain English, most retail traders aren't betting on Bitcoin's price going up right now. He mentioned this could indicate a potential reversal, but if retail traders begin piling into long positions en masse, it could be a bearish signal. He also highlighted that Bitcoin's open interest, OI, which is the total number of derivative contracts that haven't been settled, is hitting historical resistance levels. On October 16th, Bitcoin's open interest reached $39.36 billion, a new year-to-date high. He suggests that a price dip followed by a decline in open interest could confirm a correction is on the horizon. But hold on, other analysts have different takes. Take some well-known crypto investors like Lark Davis, believing that this surge in open interest might actually be signaling a massive rally ahead. In his October 15th X post, he said this means an influx of attention and liquidity is starting to flow into the crypto market. market. Such a spike often signals a significant price movement ahead. And I would urge that this significant price movement could be in either direction. Just bear that in mind. Even veteran traders like 𝗕𝗘𝗪𝗔𝗡𝗡 weighed in, saying that Bitcoin's price is in the window. Will Bitcoin escape through the window or have the window slammed on its head? So basically, it could go either way. Some analysts are even hoping for Bitcoin's price to drop back to the February levels, thinking that would be the perfect buying opportunity. The head of research at 10x Research mentioned back in August to ideally time the next bull market entry, we aim for Bitcoin price to fall into the low $40,000. So what's the takeaway here? The market is showing signs of strength, but it's also giving us kind of reasons to be very cautious. It's essential to keep an eye on these indicators and not get caught up in all that hype. Bitcoin and altcoins are on the rise, fueled by China's economic stimulus and positive market sentiment. But remember, while things are looking bullish, some analysts are advising caution, suggesting we might see a final dip before another leg up. Okay, let's take a look at Bitcoin's price action. So here we have Bitcoin paired up with USDT. We're on the 1 hour Binance chart here, and you can see that we were talking about this area in the previous couple of Bitcoin videos, right? So we were looking for Bitcoin's price to come up towards 66,781 to 67,950. We did actually rally up a little bit higher. We're talking about the potential short positions in here when it comes to Bitcoin's price action. Now, here you can see we have on this 1 hour time frame higher highs and higher lows. The 50 EMA, which is our blue line, is acting as support along with the 50 simple moving average, the yellow line coming through the chart here. So we do have a bit of support to be found here on BTC's price action. Now, it does look to me like we still have a bit more room to the upside for Bitcoin here on the hourly. Now, if we take a look at our momentum, we can see that our stochastic RSI is down in this oversold area at the moment. So this is looking like a pretty reasonable position to be in. We can see some upward potential here. On the 4 hour time frame, we are looking for downward moves though. Same with the 8 hour, which if I bring that up on the chart here, you can see the 8 hour is in the overbought area with a bearish cross on the smoothing of K. And the daily chart is also in a very similar kind of position where we are looking for this cross, with the yellow line being the stochastic RSI, the white line being the smoothing of K. Okay, so it's a little bit of volatility to maybe see on the smaller time frames, a little bit more positivity on the smaller time frames. It to me does look like we are getting close to a reversal. Okay, if we turn off the stochastic and bring in the relative strength index on the divergence indicator here, you can see that we've been kind of ranging sideways, just hovering above the 50 level. For anyone who doesn't know, when the relative strength index is above 50, it is a bullish time for momentum. If we drop down lower than the 50 line here on the relative strength index, then we are going to be slipping into bearish territory. Okay, so we're kind of riding that line. We kind of could go either way. This is kind of what the news is indicating. This is what a lot of the analysts are saying. There's a lot of perma bulls out there that only ever want to tell you the bullish things. And then, of course, we've got some of the more realistic analysts, in my opinion, which will tell you either way. Some people are telling you it's straight. It can go either way, ultimately. Our volume profiles are also very interesting. Okay, so when we start thinking about divergences, what do we see? Well, we can see higher highs in price while simultaneously volumes are coming down into lower highs. This kind of shows us weakness in this move to the upside. Okay, so we want to be aware that things are not necessarily as strong as they need to be. And what I will do actually, I will try to actually bring in another indicator that I know a lot of people do like to use. We call it the MACD. Okay, which is basically moving average convergence divergence. If I bring that onto the chart here, and what I'll do is I will merge this one with the pane above. We'll just do that, and we'll turn the stochastic RSI off and just bring this in. Okay, reason for this, I want to actually just do some editing in the settings, because all I really want is going to be the histogram. Okay, so we'll take a look at this histogram for a second here. Okay, and what I will do is bring this back down, and we'll merge over to the right on this one. Okay, and then we will just do regular, and we'll bring it back in. There we go. Okay, so what am I doing? Well, I'm looking at here is some interesting stuff. Okay, so we can see the potential here in some divergences. Okay, so basically what I'm talking about here is we have higher highs, okay, on our price action, whereas our momentum, which is indicated within our histogram here, is showing us with actual weakness in that move, right? Higher highs highs, but divergence in that momentum. This shows that we are likely to see reversal here. Okay, so we want to be blissfully aware. We can't just go into the kind of this blind thinking that we can only ever go up. We are on the cusp of a correction, in my opinion. Right? If I roll this up into a daily time frame here, and again, just bring in our histogram so we can see what do we see here. By the naked eye, we can see actually the volume profiles are not as bad as they historically can be. Okay, but if we start turning down here, which is the potential, which is why we've got this short position in, we could see again higher highs on the daily time frame here, but lower highs on that histogram. Okay, so again, we're showing weakness going into this move. Now, if I zoom out, if I just get rid of the histogram as well, if we zoom out of this, we can of course see that Bitcoin is going to be testing this trend line. Okay, so although we have broken above the $66,498 level, we haven't broken that $70,000 previous high, and we haven't broken some of these other ones at around $72,000 either. These are going to be the bigger breakout areas that we're going to be looking for. However, it to me does look like we have weakness within everything that we are looking at on the 1 hour and daily timeframes, right? So although we might see some volatility, we might see the price action move up just a fraction more when it comes to BTC, we have to be aware that actually there's a lot of chance here that Bitcoin might actually be looking for a correction, and that correction, as I've been through in the other videos when it comes to BTC, we are of course going to be talking about Bitcoin's price action coming down more towards that kind of 50,000, but potentially even losing that with the $44,000 to $48,000 target that I was talking about in the previous video. Okay, now obviously those targets are moving. As the higher we go, those targets actually do lift up. The $49,000 double bottom is a scenario that I have been kind of talking about for a while as well when it comes to Bitcoin. So kind of want to urge everyone who's kind of interested in XRP to understand what's going on with the market leader, what's going on with the broader crypto market, because these are critically important things that we need to understand before we just kind of only focus on one particular altcoin. Okay, so for Bitcoin, it to me does look like we are likely to see a major correction for BTC, which will likely roll over into the altcoins. The BRICS alliance, that's Brazil, Russia, India, China, and South Africa, have decided to reduce its reliance on the US dollar. And get this, they've even expanded to include countries like Egypt, Ethiopia, Iran, Saudi Arabia, and the UAE. So what does this mean for XRP? Well, some experts are suggesting that XRP could be a leading candidate if the BRICS nations decide to implement a digital currency as their payment system. Crypto experts shared a video kind of featuring US representatives who expressed concerns about the BRICS nations moving away from the dollar. And basically they warned that this shift could lead to uncontrolled inflation in the US and a plummeting dollar. Basically, they're highlighting the XRP's potential in this scenario. They believe that the BRICS countries could choose a digital currency. XRP would be at the top of the contenders list. Why? Because XRP is known for its ability to facilitate swift and secure transactions at a low cost, addressing inefficiencies in the current financial system. Ripple, the company behind XRP, has already partnered with global financial institutions to promote XRP as a bridge currency for cross-border transactions. The XRP ledger, XRP is highly scalable and efficient, capable of settling transactions in seconds. This makes it incredibly appealing for countries and businesses that frequently send money across borders. Now, imagine if the BRICS nations adopt XRP as a bridge asset. It could streamline transactions between their diverse currencies, reducing costs and increasing efficiency. Many in the XRP community are optimistic about this possibility. In fact, a prominent crypto CEO recently predicted that this could happen by 2025. On social media, especially on X, formerly known as Twitter, there's a lot of chatter about this. Supporters are excited about the potential for XRP to gain massive adoption on a global scale. Critics, however, are skeptical and cautious, caution. While it's an exciting opportunity and prospect, it's still speculative at this point. In the meantime, other Developments are adding fuel to the fire. 80% of Japanese banks are reportedly working with Ripple to enhance international payments. Plus, Russian President Vladimir Putin has announced a blockchain-based payment system for BRICS, aiming to bypass Western financial institutions. But it's not just BRICS, though. The Commonwealth of Independent States, CIS, which includes 12 countries, is also moving away from the US dollar, setting 85% of cross-border transactions in their national currencies this year. And there's talk of BRICS considering the Chinese yen for oil payments. So, could XRP be the key to a new era in global finance? Only time will tell, but it's definitely something to keep an eye on. Now, let's shift gears and talk about some exciting events happening this week that could impact XRP's price. XRP is showing positive momentum, retesting that critical 55-cent level and rising by about 2%. After some consideration, traders are feeling optimistic, and a lot of the buzz is around the upcoming Ripple Swell conference happening on October 15th and 16th. For those who don't know, the Ripple Swell conference is a big deal. It brings together influential figures from both the cryptocurrency world and traditional finance sectors. The conference will cover important trends and issues in the financial sector, including topics like stablecoins, tokenization, and the effects of cryptocurrency ETFs on the overall economy. On the first day alone, there were some heavy hitters speaking. There's a regulatory fireside chat between Stuart, the chief legal officer at Ripple, and Adrian Harris, the superintendent at NYDFS. Other notable speakers include Ripple CEO Brad Garlinghouse, the former FDIC chair, and Tim McCourt from CME Group. The emphasis, I guess, will be on how the current trends can foster innovation and how to navigate potential legal issues, a hot topic given the ongoing legal battles Ripple has faced with the SEC. But here's where it gets interesting. Whale accounts and institutional investors have been accumulating XRP. Over the weekend, whales purchased more than 40 million XRP. Investors have also bought $1.1 million worth of XRP ETPs in jurisdictions outside the US, showing growing interest even without a spot XRP ETF available in the US. This accumulation signals confidence in XRP's future, especially as Ripple continues to challenge the SEC. The recent market movement suggests increasing institutional demand, and many traders are hopeful that this will translate into significant price rally. So, what's the price outlook? The first target is to break and close above the 55-cent level, which has been a sticking point in recent weeks. If XRP can maintain above this level, traders anticipate a rapid rise to 60 cents and possibly 66 cents. However, the market is still a bit cautious. A break below 55 cents may result in a pullback with support around 50 cents. The overall decline has started in early October, is still in place. So for a true reversal, XRP would need to rise and maintain its price above 60 cents. Right now, the focus is on daily trading volume, which have been above $1.1 billion, close to levels we saw in early August. In the past, Ripple has used the Swell conference to unveil new initiatives, especially aimed at SMEs, and to highlight the potential of blockchain for sustainability and climate finance. This year, the emphasis on stablecoins and digital asset management shows Ripple's commitment to expanding its services in the crypto arena. On the social media side, the XRP community is buzzing with excitement. Many believe that the positive news from the conference could be the catalyst needed for XRP to break out of its current range. Others are more cautious, reminding everyone that whilst conferences can boost sentiment, market fundamentals still play a crucial role. Either way, it's an exciting exciting time for XRP holders. Okay, so let's take a look at the XRP chart. Here we have XRP paired up with USDT. We're on the 1 hour Binance chart, and we have seen a lot of volatility in the last few days or so. So we were tracking this idea of coming up into this higher range, right? This was 55.81 to 56.23. Okay, we actually saw a big move to the downside. This broke our structure. Okay, so we now have to go ahead and remove our ideas here and actually put in the more accurate terms of what is going on. Now, there's still the chance that we rally up into these higher ranges, just the moves that we get there are slightly different. So with this move coming down, okay, so we had our swing high on 0100 hours on Tuesday, the 15th of October. We then have our move to the downside, which is 1500 hours on the 15th of October. This move to the downside was a 4.34%, and it has created an overlap. Okay, the overlap being down here with this wick over this side. This is important from an Elliott wave theory point of view. Now, this correction to the downside is okay, and we start to see a bit of a move back upwards. Okay, now looking at this, our kind of next target ranges have to be considered a three-wave pattern. Okay, now looking at it, it looks very strong for me to kind of look at that. The swing low that we had at the 1500 hours was 53.15, so we put the fib there, and you can see here that we are actually going to be looking for slightly higher target now. Okay, it would actually come more in line here between 56.22 and 56.98. Okay, now that comes in line with a three-wave structure. Minimum expectations, I'm going to go ahead and delete this one off here. The minimum expectations will be a double top coming in at 55.56. Okay, so on this 1 hour time frame, we can see here that we have the potential for a three-wave pattern to bring us up into those higher ranges, which is still our B wave. And all in all, we have a very corrective, as you can kind of see, C wave high target, which was targeting out 56.12 to 57.11. Okay, so for the most part, we're still very much in the area for XRP on the 1 hour time frame. Now, from our momentum, we'll go ahead and remove the histograms there for a second, bring in the stochastic RSI, and we'll put this into auto so we can see. Here we can see on our 1 hour time frame, we're in the oversold area. We are looking for upward momentum on the 1 hour time frame. The 4 hour time frame, though, is of course still looking for a potential upward move. We are cautious here that we might see a bit of a cross. If we do, that could be a bearish tail, but still upward momentum potentially supporting here on the 4 hour time frame. The 8 hour still moving up into the overbought area. Again, interesting to see we've got kind of a small amount of momentum left on these larger time frames to the upside. On the daily, momentum wise, still heading up into the overbought area, still can be a couple more days, maybe a week or so before we start to see these corrections. So roll this back to our hourly chart here. There's a strong possibility in my mind that we're looking to finish off these higher moves before we have those bigger corrections. As I zoom out of this, you know we've been tracking it for a while. We are looking for this bearish move to come and bring us back down lower than 50 cents. Now, obviously, there's a lot of news that I've been talking about, right? We spoke about everything kind of going on with Bitcoin as a kind of precursor to a lot of this, right? Bitcoin is in that kind of make or break situation, can go either way. We've obviously got a lot of bullish analysts and a lot of bearish analysts, but if there's some objective analysts out there that say, look, to be honest with you, it can go in either direction. Bitcoin's in the window. And if Bitcoin has a major pullback, as I personally suspect it will, then unfortunately XRP is likely to follow suit. Okay, now we're going back into our XRP chart. With all of that consideration, we can have all the best fundamental news going on with XRP. If Bitcoin tanks, XRP is likely to tank with it. Okay, now Bitcoin still looks to me like we have some short-term volatility to the upside, and as such, I think that is how Bitcoin rallies up. XRP rallies up into these higher range targets. So we are looking for another run upwards for XRP, in my opinion. Now, taking a look at our internal workings here, we are above the 200 hourly EMA, that is the white line. We're above the 50 EMA, that's the blue line, and above the 50 SMA, the yellow line at the moment. So confidence here can be that we find support on these ranges. Taking a look at our internal structures, this to me looks like we had an impulsive break, but we're going to go ahead and sense check it anyway. Make sure that we are in line with our expectations here. Yes, we had the impulsive breakup. So let me draw that in so you guys can see. We had 1, 2, 3, down here for 4 with an overlapping into 5. It's a diagonal based pattern, which is very, very interesting. This means that we might be looking to move up in either a zigzag pattern or we have something else kind of unfolding here. But for the most part, everything is kind of very, very interesting on these points. I'm going to go ahead and see if this actually falls in the zigzag. It doesn't. It's actually impulsive because we didn't get that overlap in that wave 4. As you can kind of see here with this line here, I'm going to remove this one. You can see we did not come down into that low. So the wave 4 is down here. So it's actually impulsive. That there actually does change things a little bit. So let's go ahead and take a look at this structure here. This is an important one. Move this up and we can see that we did not hit 1.618 here. So we do have a 5-way structure. So this is an end of move, in my opinion, with this 5-wave move. So here we can see, actually, if I go ahead and just bring that back for a second, we fall right in line with the expectations of this, right inside here, basically between 55.14 and 55.49. Remove that again. So you can see this is the reversal. This becomes a 335, and basically you have a 335 that looks like so. Now this correction coming down is a bit of a reset, and then we have that next run to the upside. So knowing that this is a 335 correction that's finished, we measure this entire distance. If we do find support in these lower ranges, as I suspect we will, then we are going to be looking for those higher moves, in my opinion. So to me, it does look like we still have a bit more volatility to the upside on the 1 hour time frame for XRP, and that is going to complete our B wave. And unfortunately, if I roll this up into our daily time frame, guys, you know we're in the short for XRP, and we are looking for this C wave to come down towards 45 cents, well, 46 cents, right? So we know that there's a big bearish breakdown for XRP here after hitting those higher ranges around 65 cents back here in September, right? So we know that this is the pattern. We know that there's a death cross looming here as well. We highlighted that in the previous video, and it does to me look like we are kind of finding resistance on that daily 200 EMA here for XRP, right? So although we have some short-term volatility to be expected to the upside on the hourly chart, the daily chart remains lower than the 200 EMA. If we close above the 200 EMA, which is currently 55.32 cents, then maybe we can turn a little bit more bullish. But ultimately, our structure remains bearish, in my opinion anyway, unless we breach the higher structured range up here at 66.49 cents. If we do not break that, unfortunately, all we're going to do is lower or higher up the lower range targets, right? The higher that the B wave goes, the higher that the C wave goes. But as it sits today, with resistance on that 200 EMA on the daily time frame, which is why we had this short idea running. Ultimately, we are in this bearish pattern for XRP. Now, momentum-wise, of course, we can see that we're overbought on the daily stochastic RSI, and we're going to be up here for a while. I don't think it's going to happen straight away, but we can see that we're looking to test out the 50 level on the relative strength index. Again, we're lower than 50, so we are bearish. We're in bearish momentum territory, right? We want to bear that in mind. Volume profiles, of course, as we, if I can bring back the chart here, as we have this run to the upside, you can see volumes are decreased from what they were. So again, it doesn't show strength in this move. Now, if we go ahead and turn the volumes off and bring back our MACD histograms, what do we see? This is really quite an interesting one as well. Here we can see that momentum isn't necessarily going to be supporting this this move either. So interestingly, here there's no real divergences being noted just yet, specifically from where we were previously, where there's no higher highs in price with histogram. But the histogram is showing us some really interesting kind of stuff, specifically where we did have higher highs coming in here on the price action, yet our histograms are going lower. So on this, we can see that there were higher highs on price while simultaneously coming down into lower highs on the histogram. So on a bigger macro scale, we know things are not strong. Let's roll this up into a weekly and see if it actually shows us any more kind of clearer structures in that kind of idea. So in here, you can see that actually momentum is just weakening overall. No real divergences being noted, no higher highs on the weekly time frame. We do see, of course, here divergence though, which is quite interesting. Lower lows here, but higher lows on the lower histogram. So again, we were looking for the weakness in this move and the rally that we've seen, but ultimately we are looking for the breakdown. So there were some points on the weekly chart where, you know, back in July, we were actually looking at some positive divergences. Right now, we're not seeing any of that. On the daily time frame, our concerns are that ultimately XRP is still looking for losing 50 cents on that low side, which would be the minimum expectation anyway, will be 50 cents. So we are going to be looking for that with rejection from the 200 EMA. So I guess to kind of summarize everything, right, we have a lot of ideas floating around on the news, right? We can see Bitcoin ETFs really kind of being loaded up, right? We see a lot of institutional interest, but I do want to flag that institutions don't try to time the market. They just kind of slowly build their positions over a long period of time. Take a look at Tesla as an example. They bought the majority of their Bitcoin at the peak of the 2021 bull market, right? They weren't loading in during 2022, for example, right? We can take a look at a lot of these inflows and think, okay, the market's ready to move up, but actually it might not be. There might be another buying opportunity, which is a lot of the analysts are saying in terms of BTC and the wider crypto market. For XRP, there's always a lot of bullish news, a lot of fundamental stuff. Lots of people look for a reason to be bullish on XRP. Unfortunately, 9 times out of 10, the fundamental news never actually materializes into kind of a trading kind of paradise. Unfortunately for me, I do think that XRP is likely to follow what is going on when it comes to Bitcoin. And I do see Bitcoin making a move to the downside. And I also see XRP making a move to the downside on the daily timeframes. This might not happen right away, but I do see it on the near term. So several weeks from now, we are probably going to be looking at that 50-cent level and looking at some great buying opportunities, because I do think the next move to the downside for Bitcoin, for XRP, and for the wider crypto market is the buying opportunity before we get into the next big bullish breaks. Now, of course, these are just my thoughts and opinions on the data in the charts as I personally see it. And of course, you can let me know what you think in the comments down below. Let's go ahead and jump into the charts and talk about where I think those trade ideas are when it comes to XRP. So obviously we'll start on the hourly chart, right? Because here we can see that there's a potential rally due here, right? And there's some trading opportunities that do fall inside here. So the trading opportunity to look at, in my opinion, will be a long position in and around the kind of support level of the 50 EMA. Now, it's possible that we've already kind of hit this. So I would look at this and in the kind of the lens of putting the stop loss lower than a 200 EMA, and then we'll look for pushing up into that slightly higher range up here. Now, we obviously want 1.5 minimum on the risk reward ratio. So I would quite happily take this trade idea here, where we kind of have an idea where we enter into the market around 54.82 cents. We put the stop loss at kind of 54.08 or lower, depending on your kind of risk tolerances. And of course, we've targeted out 55.93 for that rally to the upside. Capture some of that liquidity as we start to see this last little push to the upside. If we want to, we can target out the actual target range. So we go ahead and put the target at 56.23 and give ourselves a little bit more breathing room on the stop loss, and still targeting out 1.5 risk reward ratio. So the stop loss could become 53.88 cents. Still not lower than the previous swing lows. So again, it does depend on your own risk tolerances, but that would be my approach on the 1 hour time frame when it comes to trading. From the daily time frame, the opportunity here still remains very much what I see within this short idea. Okay, so this one that's been around on the channel for a while now basically is looking for an entry around the 200 EMA. The 200 EMA, of course, is sat at 55.56 cents at the moment. Okay, so that's the idea. Now, obviously, this one here that I've drawn in looks at an entry around 55.23, stop loss higher than our previous swing high up here, which is critically important at 59.06, and then of course taking profit down at 46.03. Okay, risk reward ratio is 2.4, so this is a wider one, a trade idea that would last multiple weeks, in my opinion. Okay, so from a trading point of view, those are the kind of two ideas that I have for XRP trades at the moment. And talking about trading, Blowfin are killing it with the promotional activity at the minute. If you're new to Blowfin, this is your chance to grab a slice of a massive 60,000 USDT pool. Yes, Blowfin is rolling out an awesome promotion where new users can earn their share of 60,000 USDT just for signing up, predicting Champion League results, and trading on their platform. Blowfin, one of the rising crypto exchanges, is giving new users the opportunity to win big. How? By signing up and participating in trading. You can get your share of 60,000 60,000 USDT. Whether you're a seasoned trader or new to the game, Blowfin is making it rewarding for everyone to jump in. Here's how you can participate. Sign up on the Blowfin using the referral link in the description. Start trading on the platform where trades will count towards the tickets and points for the prize pool. By being an active trader, you'll be eligible for more tickets, points, and your share of the 60,000 USDT rewards. This is an exclusive promotion offered by Blowfin. For all the terms and conditions, click the link in the description. This promotion, of course, is not affiliated with YouTube or Cheeky Crypto in any way, but is a fantastic promotion offered by Blowfin. So what are you waiting for? This is a limited time offer, and you definitely don't want to miss out on your chance to grab some USDT. Hit that link in the description, sign up to Blowfin and start trading and get in on your chance to win big. Don't miss out on this incredible opportunity with Blowfin. Sign up, trade, and claim your share of that 60,000 USDT pool. Good luck and happy trading. And of course, all the terms and conditions can be found on the website for Blowfin. So do go ahead, check it out, linked in the description down below. So guys, that's going to wrap up today's video. I'm going to share obviously my thoughts and opinions on the data in the charts, in the news as we see it today. Let me know your thoughts on all of this in the comments down below, or join us in our free Discord server. We'd love to continue the conversation down there. And if you haven't done so already, check this video out right here. It's not one that you're going to want to miss.